Well, good morning and happy Thursday in the Valley of the Sun. Welcome to the Rick Helps Real Estate Show. This is a show where we try to look at the numbers that you probably can't see and we try to talk about them and make some sense of it. This is actually my 445th live stream. Can you believe that? I've been doing it that long. I decided in March of last year when we were all told to stay home, I thought, well, all we can do is just share the numbers and take a look at it and try to make sense of it. Make good predictions, make bad predictions, but at least open up the discussion and look at the numbers so that nobody's blindsided. So we've all learned a lot in this journey, especially my early subscribers that have jumped on. We know how to speak about the real estate market and talk about what the numbers are really showing us. Yet I don't think any of us are really good at saying where it's going to land. So it's anybody's guess. Today we have 5,713 homes on the market. That's about, well, it's gone up by 10. Now we have 5,723. Thursday is always the day where inventory starts building, and it's building slower than last week because we're going into a holiday weekend. And a holiday weekend, quite honestly, the numbers don't count. And one weekend does not make a trend. It is showing some signs on the 7-day moving average that it's starting to tighten up here on homes under contract and new listings coming up. But new listings coming up are starting to climb, and homes under contract are starting to flatten out again. So it's hard to tell. It's really hard to tell, and that's why I'm saying, are we slowing down? Can you feel it? It's kind of like we've been driving 200 miles an hour down the 101, and now we're only going 175. So there are indications that it's slowing down, and there's some weird stuff going on out there too that I want to show you. But lots of bubble talk's been going on the past year, and they may be right, but I don't know. It certainly looks like buyer fatigue at this point. Now I'm coming out with a video at 3:00 this afternoon that addresses people my age that are over 65. That chances are you've been living in that house that you bought 25, 30 years ago, like back in 1991, and now you want to sell and buy something else, but you haven't done a real estate deal in 30 years. You're wondering, well, how has it changed? What was it like buying a home in 1991, and what's it like buying a home now? Is it easier? Is it harder? What's changed? So it's a short video. It's not too long, but I go into some of the details, just kind of flying above at 30,000 feet. So if you're in that retirement age, you may want to stick around at 3:00 when that one comes on. It's not going to be a live event, but just a little informational video. So what are we seeing? Well, it all boils down to supply and demand. And you can see right here that supply is trying to come up, and it is coming up ever so slowly, those little dots. Demand is coming down. Lots of discussion on why demand is coming down, but the underlying feeling seems to just be that people are worn out. And right here it says Sacramento area reporting fewer homes attracting multiple offers, a possible sign of stabilization of the market, if not a slowdown. My take is the data is starting to show some limits to what buyers are willing and able to pay. I think that's the real thing going on right now. There's just limits. And so the markets tend to correct themselves. But you still see headlines that say real estate sales are up, and then you can turn around and see that real estate sales are down all in the same day. And you can see that interest rates are going up and interest rates are going down. Right now, mortgage rates, despite everybody saying that rates are going to go up, they haven't. They're going down. Today we're at 3.17. Yesterday we were at 3.19. You'd hardly feel that. Look at your monthly payment. That might be a cup of Starbucks, but going down, which is interesting to watch. Now you see another article here that says pending home sales surge higher, but economists warn that the housing market could soon hit bottom. Are we hitting bottom, or are we going to just kind of slow down? So you read in the article and it says pending home sales rose 8% in May compared with April. The National Association of Realtors reported Wednesday. Economists polled by MarketWatch had projected a 1% decrease for pending home sales in May. So the economists that they polled said, well, we're going to be up only 1%. Instead, we were 8% versus May. That's according to the National Association of Realtors. But then you go over to NAR again, And they're going, wait a minute, right here, while sales were down slightly, the median existing home price for all housing types saw a record year. So we knew prices were up. But guess what? Existing home sales are down almost 1%. But you said here that they had projected a 1% decrease for pending home sales in May. So in this article, they're making it sound like your projections are way off. And this is on Market Watch. But then you go over here and they were actually spot on, down 1%. So existing home sales are starting to decrease, but man, we can barely feel it. So when you look at headlines, you have to jump from one source to another source, but then it all boils down to coming down to your local market. And what we're seeing in our local market is that inventory is just trying to come back up, that the multiple showings and the multiple offers, we can feel it as agents. We can feel it starting to slow down, but we're not feeling that when you list your home that it's not going to sell. And we are seeing some signs that buyers are getting a little bit of relief, but not a lot yet. There are still some homes in the 300,000 to 400,000 range out there, believe it or not, that are actually selling for their asking price. But you got to keep going out there and trying to find them. Got to keep swinging the bat, like I say. So they're out there. They're out there. The things that I find interesting is this article here. Fed reverse repo program sees demand soar to just under 1 trillion overnight. Now, this is a really complicated thing that's going on. And there's a couple takeaways on it. And they're saying here, essentially, the Fed is keen to reduce cash balances in the banking system to avoid any overnight rate from going negative, wrote Gary Kidd, a portfolio manager at 24 Asset Management. So the repo operations soak up some of the excess liquidity currently overwhelming the U.S. money market funds, which have been flooded with cash this year, sending their total holdings above $4 trillion. There's a lot of cash out there. Banks overnight don't like to hold a lot of cash. They like to hold assets. They like to hold treasury bills, and it's a very complicated formula, and nobody knows where that's going to land. But again, it points to extremes in the market, and extremes are always something that we should kind of keep our eyes on, because you never know what it's going to mean. And look at this extreme. This is repo, reverse repo, it's called. Look at that chart. Look how it went up. And so you read articles and go, well, it's the end of the quarter. Well, it was the end of the quarter here, and it was the end of the quarter here. I don't buy that. That doesn't make any sense. Why is it so wildly different right now? And what does that mean? I think what it means is things are not normal right now in banking. I think it means that there's just so much money out there that, and so much cash, all this stimulus money has just kind of made it to the banks. It hasn't even come out into the economy. And that's why there's a lot of discussion about inflation. So that's a long-term outlook that I can't even begin to guess what's going to happen, but that's a number that I'm going to watch. I want to see what's going on with this repo market and if there's any cracks in the system. So I'm going to try and find somebody that can explain that to me, because I've been trying to read it. It makes my hair hurt. But one correlation that I saw is that whenever the reverse repo starts to go up, guess what happens to interest rates? They go down. So while we're hearing that interest rates may go up this year, there is market pressure for rates to go down, and they are going down because lending's going down. Mortgage applications have gone down. They have gone down a little bit. It's like everything else that we've looked at. It says pending home sales fired up after an April slump here. So that kind of contradicts the 1% that we saw. Residential projects continue to drive construction, but mortgage application volume nears 18-month low. So people are not applying for mortgages like they were. So that's why mortgage rates are coming down, because there aren't enough people chasing that product. Mortgage rates are coming down because they want more lending to happen. Banks are not tightening. So you look at it, a couple factors here. You see that the reverse repo rate is going through the ceiling. And then whenever it goes up, rates come down slightly. Is there a possibility that this summer we're going to see lower rates, lower than 3.17? What's that going to do to housing? Is housing going to continue to keep going bonkers? I think housing's going to continue going bonkers July and August, simply because of that first chart that I showed you. And that first chart that I showed you, it shows that supply and demand is still way off. So that means housing is still going to be very, very brisk. So that I don't see any slowdown coming here. But wouldn't it be interesting if interest rates are not headed up and they start heading down? So we're going to watch those numbers all the time here and pay close attention to that repo market. So I will be back tomorrow with Pat at 3 o'clock. Until then, have a fantastic Thursday, everybody.